Welcome back everyone, and in this video, we're going over the top 10 companies that Barron believes are winners for the new year. These are the companies they expect to outperform the overall market in 2021 and provide investors with a great total return. Barron gave 10 different stocks from various sectors of the market, and they gave us a nice mixture between some growth plays and some nice dividend payers. So for each of these 10 companies, we're going to take a look at their current share price, the share price performance in 2020, and some future expectations for 2021 and beyond. And all these companies are operating within some different sectors, but all provide essential services and are expected to grow over the long term. So these are 10 different companies from Barron's, and before we actually jump into this list, if you're new to the channel, please hit that like button and subscribe. I am the Gen Z Investor. Every single day we talk about the stock market and go over different stocks you can buy and sell. And of course, we discuss any major stock market news or headlines. So please hit that like button and subscribe for daily videos about the market. And we're going to jump right in to stock number 1 from Barron's top 10 list, which is Google, one of the largest companies in the world. And this is a stock I am personally bullish on as well. They're up more than 27% over the past year. And this is one of the 2 companies that was on this year's list and was also included on the list of best stocks for 2020. And you can see the company has actually outperformed the S&P this year. And over the past 5 years, shares are up 124%. You can take a look right now. They have a market cap at 1.17 trillion and trade at a forward PE of 33.55. So we all know Google is a market leader in the tech space, and I don't see any other competitors kicking them off of their market leader position. Next year, Yahoo Finance analysts are expecting 18.7% growth, and Google is expected to grow at over 16% per year over the next 5 years in the future. The company is rated as a strong buy now, with an average price target at over $1,900 per share over the short term. So Google, I believe, is a great buy for 2021, and I completely agree with Barron on this growth company for your portfolio into next year. I'm a big believer in Google and don't see any other companies really kicking them out or taking any of their market share in their respective industries. Now moving on to stock number 2, we have Berkshire Hathaway. For one of their Class B shares, the market value is sitting around $226, and their share price is almost flat over the past 12 months. We've seen a decline of only 0.5%, and from the March lows, the company has nicely recovered back to around pre-pandemic levels. They have a market cap at $526 billion and trade at a forward PE of 28.73. So this is Warren Buffett's company, and this company is known for their massive cash position, sitting on over $100 billion of cash on the balance sheet. This allows them to do a ton of share buybacks, but as well gives them huge amounts of cash for future acquisitions. Even during the March lows, we didn't see Buffett do any major deals, and people are expecting him to actually unload some capital, make some major acquisitions over the year of 2021. So we'll see what's going to happen with Berkshire Hathaway, and taking a look at some future growth expectations from Yahoo Finance. They're expecting more than 16% growth next year, and they expect Berkshire Hathaway to average over 23% growth each year over the next 5 years down the road. So they actually expect Berkshire Hathaway to turn things around and actually post some significant growth rates over the next few years down the road. So this was a very interesting company, and this is actually the second company of the top 10 that was included in the list for best stocks of 2020. It is now also included in the list for best stocks of 2021. And the next company we're going to take a look at now is Apple. They were listed in Barron's top 10, and this company and their performance really impacts how Berkshire Hathaway performs as well. Like I previously mentioned, Apple makes up more than 40% of Berkshire's equity portfolio, so a lot of Berkshire's share price performance really is related to how Apple performs as well. And Apple has killed it over 2020. Over the past year, the share price has grown more than 84% and currently trades for $131. Over the past 5 years, shares are up 382%, and this is the largest company on the market with a $2.23 trillion market cap. They trade at a forward PE of 33, and their current dividend yield is 0.63%. In the future, they're expected to grow by around 9.3% next year and average over 12% growth per year over the next 5 years. And I actually think these are more bearish expectations for Apple. I think they can outperform these numbers and will continue to be a market leader. They continue to innovate. Their service revenue is growing at a tremendous rate year over year. They have the new Apple Car, which has brought some new headlines to the company. And I think overall, this will be a nice performer in 2021 and beyond. And of course, I am somewhat biased because Apple is the largest holding in my personal portfolio, and I own around 90 shares and makes up over $11,000 of market share in my $78,000 portfolio. So Apple, I believe, is going to outperform, and they do pay out a very nice dividend as well. So it is very tiny with a yield of only 0.63% to start off with, but the payout ratio is extremely low, making up only 20% of their net income, and the company grows their dividend, averaging more than 10% growth per year, so your dividend does compound at a very nice rate. So Apple is the third company in Barron's list, and I think this will be a great stock to own, and of course, the largest company in the world. I do think they will outperform for many years down the road. If we jump over to stock number 4, we have CocaCola. So of course, this is another company very impacted in how their performance will relate to Berkshire Hathaway. Berkshire Hathaway owns 10% of Coca-Cola, and they've been shareholders in this company for decades. Coca-Cola, of course, took a huge beating in 2020. Shares are down more than 3%, and you can see the pre-pandemic high at around $60 per share, so they haven't reached back up to that point, currently trading around $53. They have a market cap at $228 billion, a current dividend yield at 3%, and a forward PE at 28. Over the past 5 years, shares are only up 21%, so this company really hasn't been the best performer over the past few years. But analysts are expecting that to turn around, and next year we're expecting over 11% growth from Coca-Cola. This, of course, is known for their dividend as well, currently yielding 3%. Their payout ratio is on the higher side at 86% of their net income, and this is a dividend king with a 58-year dividend growth streak. They grow their dividend averaging 5.5% per year growth, which is okay. It's somewhat average. It isn't that great, but with a company that has some slower revenue growth, their net income really isn't expanding at a fast rate, and their payout ratio is already that high. It's to be expected that this rate comes in at only 5.5%. So Coca-Cola is the fourth company on Barron's list that they actually expect to have a nice year in 2021. Hopefully, if restaurants reopen, people go out more, Coca-Cola demand goes up, and this company can perform very well over the next calendar year. Now, continuing on with stock number 5, we have Goldman Sachs. Ticker GS, currently trading around $256 per share, and the company has grown 12% this year. One thing I want to point out, which I'm sure you've already realized, is for all of these companies in Barron's top 10 list, you cannot make a buying decision over the stock just with how I'm going over them. I'm giving you a quick overview of the company and what Yahoo Finance believes they're going to grow at, and of course we take a look at their dividend. But to actually decide if you want to own these companies in your personal portfolio, you have to do a lot more research, speak to some qualified professionals to make a qualified investment decision. This is just a quick overview to share with you what Barron's list comes out with, and I'm going to give my personal opinion like I've been doing on each of these companies as well. So Goldman Sachs got some great news as the Fed is allowing some major investment banks and traditional banks to start share buybacks in 2021. This company will buy back a ton of shares, returning capital to investors and really boosting shareholder value. They have a market cap at over $88 billion, have a nice dividend yield at 1.95%, and currently trade at a forward PE at 10.9, so a very nice value coming from GS right now. Next year, we're expecting over 23% growth, and over the next 5 years, we're expecting over 10% per year growth from Goldman Sachs. If we take a look at their dividend, they yield 1.95%. They have a payout ratio of only 21% of their net income, so extremely sustainable over the long term, and they do a beautiful job of growing that dividend at over 13% average over the past 5 years. So the dividend starting right now around 2% is somewhat average, but that dividend is compounding and growing at a nice rate year over year. Now at number 6, we have Merck. Ticker MRK, currently trading around $80 per share. This company has actually declined 13% over the past year. They have a market cap at $200 billion, a nice dividend at 3.26%, and I believe have a great value trading at a forward PE of 13.3. And on the 52-week range, you can see they're trading towards the center. So this is a company I have been personally bullish on as well, and I've been adding to my position in MRK over the past few weeks. I've been loading up this company. I believe they have a nice dividend that will continue to grow and is very safe. And I think they are diversified, have a lot of revenue generating activities that are expanding and will provide investors with some nice long-term sentiment. Over the past 5 years, the share price is up 50%. And over the next few years down the road, you can see next year we're expecting only 6.4% growth from Yahoo Finance and averaging around 7.5% growth over the next few years down the road. This company is rated as a buy, and the average price target sits at $96 per share. The company currently trades at $80, so significant upsides over the next 12 months to hit this $96 price point. Now, if we take a look at their dividend, a beautiful yield at 3.2%. Payout ratio is extremely sustainable at only 43% of their net income, and they grow their dividend averaging 5% per year growth, which is a nice slow growth rate. It isn't the best, but I will take it over this growth year over year from a company like Merck. So this is number 6. Now we're going to jump right into number 7, which is ticker ETN, Eaton Corporation. They currently trade at $118 per share, and the company has grown 23% this year. They have a market cap at $46 billion, a current dividend yield at 2.5%, and trade at a forward PE of 28. Taking a look at their future growth projections, next year we're expecting this company to grow by 18% in 2021. So another company expected to grow at a very nice rate and hopefully outperform the overall market. Taking a look, they yield 2.5%. Their payout ratio makes up 70% of their net income, and they have a nice average dividend growth rate of 7.7%. So of course, this is company number 7 in Barron's top 10 list of stocks to buy for 2021. Number 8 is ticker MSGE, Madison Square Garden Entertainment Corp. Currently trading around $88 per share, this company has been extremely volatile in 2020 with a ton of ups and downs. It started around $88.50 back in February, and that's where it sits right now. The company has a $2 billion market cap, so extremely small compared to the others on this list, and this is a very interesting company as well. The pandemic has really shut down all live events. So Madison Square Garden Entertainment, of course, is diversified more than just the actual arena space, but another company that I believe is somewhat different, and I think it's kind of interesting that Barron included it in this list. But if we take a look, Yahoo Finance somewhat agrees with Barron. A 73% expected growth rate in 2021 is absolutely insane, and the company is actually rated as a strong buy, coming in at a 1.8. So very interesting to give my personal opinion. I don't know much about this company, but I will of course discuss them because they were included in the list, and I think this company had a $2 billion market cap. If they can actually perform and grow 70+%, I believe it will be a kind of a shocker to the market, and we will have to see. I don't know a lot about this company. I'm not going to give you my perspective too much on a business that I don't know a lot about, and I don't want to share any false information about this business. They do not pay out a dividend. They have a negative earnings per share, so the company is posting net losses right now, and we will see how they perform in 2021 and if they will actually see some massive growth and actually outperform like Barron is expecting. If we move over to stock number 9, we have ticker NEM, which is Newmont Corporation. Currently trading around $60 per share. This company is up 43% this year. They have a market cap at $48 billion and a current dividend yield at 2.68%. Forward PE on this company at 23.7. And if we take a look at some future expected growth, next year expecting 71% growth and averaging over 43% growth per year over the next 5 years. So you can see analysts are actually extremely bullish on ticker NEM. 82% growth in the current quarter, next quarter 177% growth, next year 71, 43% per year for 5 years down the road. Analysts actually have a very strong bullish perspective on this business. And if you take a look at right now, the company is rated a buy, and the price target at $81 per share compared to the current share price of $60 represents a 30% plus upside over the short term from NEM. And they also have a nice dividend, yielding around 2.7%, making up only 63% of their net income, and the company grows it, averaging 20+% growth over the past 5 years, which is absolutely incredible. So the dividend starts out at an average rate between 2 and 3%, but they compound it and grow it at an insane rate year over year. Now moving on to the final stock in Barron's list, ticker number GHC, stock number 10, currently trading around $524 per share and is down 21.5% this year. Pre-pandemic high at around $643. You can see the company took a huge beating, dropping all the way down to around $300 per share, trading somewhat flat for a few months, but slight recovery as of late. Very small company with a $2.54 billion market cap, trading at a very low PE of 12.75 and a current dividend yield at 1.14%. This is actually the only company in this list that over the next year, Yahoo Finance is predicting a decline of around 5%, but over the next 5 years down the road, we're expecting over 18% per year growth from this company as well. They are rated a buy right now. You can see that comes in exactly as a buy. The current share price sits at $524, but the average price target sits at $610 per share. So another company with a lot of upside if they hit this short-term price target. And overall, the company's dividend is on the low side, yielding 1.15%, but it only makes up 14% of their net income. And the company has actually declined that dividend over the past 5 years, and they have not been growing it. So another small business with only a $2.5 billion market cap with some strong expectations over the next few years. We will have to see how this company performs in 2021. So those were the 10 stocks that Barron believes are the winners over the next year. We've gone through them all. We have a nice combination of growth stocks and dividend payers. We have a nice variety of some huge companies with over $1 trillion market cap. We have a couple companies ranging between 2 and 300 billion. And of course, we even have two companies that only have a $2 billion market cap that we took a look at the end. So we have some major players like Google, Berkshire Hathaway, Apple, Merck, CocaCola, some main players on the market that will continue to dominate for decades that they actually believe will outperform over the short term and over the next 12 months will provide investors with a great return. So thank you for watching. Those are the 10 stocks that Barron believes are winners in 2021. Please hit that like button and subscribe for those daily videos about the market, and see you in tomorrow's video.